Hello everyone, welcome to my channel. Hone your trading skills. I'm your friend Ardi. Today I am going to start a new video series on capital markets. Some people know it as stock market, share market, trading market, and many more names. This video series is going to be for you if you are willing to choose trading as a career and want to learn from scratch and start trading in stock markets, or you are looking for second source of income, then capital markets could be a good option for you. You are just want to take some feel what capital market is, or you are planning to clear some certifications on capital markets, then this video and my upcoming videos will be very helpful to you. Anyone can see these videos, and you need not to have any prior knowledge about economics, commerce, or typical statistics or any complex mathematics. This video series I will be touching down to the water surface of the capital markets only. But gradually, in my later videos, I will be taking you deep inside the capital markets. This entire video is based on the story, and you have to listen to the story only. And the terminologies or terms I will explain to you, you should be noting down on your notebooks and remembering these terminologies. As in every movie has some actors, these actors play their roles in the movie. Based upon the dialogue and act, we identify the character, whether he is a hero, comedian, heroine, or villain. Think this way: if I remove Green Goblin from Spider-Man, or I remove all villains from the Marvel movies, now imagine what Marvel heroes will be doing in the movies. Simply, they will be chilling in the entire movie. A cool life. In the same way, there are multiple characters in the stock markets as well. So, this story I'm going to tell you to introduce these characters of the stock markets and what kind of roles they are playing in stock markets. Most important thing, all the examples I'm going to take are applicable for all the stock markets, whether it is US stock market, UK stock market, Indian stock market, Japanese stock market, or Dubai market, or Hong Kong market, or any market in the world. The concept and the terminologies will be the same all the time. So let's start our movie. Well, there are very few persons in this world who are born with golden spoon in their mouth. And rest of the people like us, we have to earn money and we have to value our hard-earned money. So, the character in our story, he is Mr. X. He is like us. He also does a job. He earns around $5,000 every month. He spends around $4,000 every month, and at the end of the month he saves $1,000. And he was keeping his savings at his home in his locker. Then I came to him and made him understand, made him think about something. I suggested him, okay, Mr. X, you are keeping your money in your home, It is better if you keep your money in savings. If you keep your money in savings, then you will be getting 4% of interest rate annually on your savings. Oh, Mr. X said, yes, it is a good option. He thanked me. Then I told him, okay, Mr. X, you can do one more thing, is you can go for the FD. If you do the FD, you will get 6% of interest rate on your FD. On the same amount that you are keeping idle in your home, it will increase by 6% in a year. He was happy. Or I suggested him to go to the post office, or suggested him to go for the PPF. And I told him there is one more kind of investment, is the real estate, but Mr. X can't do that because he has very less savings, or he has very less savings. He cannot go for the gold, silver, or any other commodities. Well, why I suggested him to invest? Well, the investment is an act that helps you to create your wealth with the savings that you have in your hand. Or in other words, you can say that you can earn more with the idle money that you are having with investment. Okay. Now, Mr. X is thanking me that I have suggested him few ideas for the investment. Okay. Now, I told him one more factor about inflation. That is inflation. What is inflation? Inflation, in simple words, is the rise in price of any good. Okay. For example, in this picture, you can see in this year, Mr. X is able to purchase these much items in his cart, okay, with $100. In next year, he won't be able to purchase this much items. He will be able to purchase some less items. Oh, it is a difficult thing. Means if you are keeping your money idle in your home, in your safe, then inflation is the factor which is weakening your savings, which is eating your savings. Right? So we have to invest to create our wealth, and most importantly, we have to invest to beat the inflation rate. So this is the first part of our story. Okay, guys. Well, this is the second scene of the story. He is Mr. Y, and he wants to start his own business. So his own company he want to register. So to register a company, Mr. Y needs few documents, few requirements that he has to fulfill. The first requirement is the number of shareholders. A company can have minimum 2 shareholders. There should be minimum 2 shareholders in a company to register. The number of directors in a company should be 2 minimum. And proper name of the company means the company of Mr. Y should be a proper name which is not being used by any other company. Company names like Amazon, Facebook, any other Apple, any other names. Registered offices. So Mr. Y must have a legal registered office address. All the documents should be in the name of Mr. Y. And at the last, most important thing is Mr. Y must have some capital to invest in his company. Oh, Mr. Y has all the things, so he registered his company. Now, let's think. I told you there must be two shareholders at least. So, one shareholder is Mr. Y. He is investing $900,000, and there's another person, there's another shareholder who is putting $100,000. So overall, they are creating the company of $1 million. Wow, good. Now, both Mr. Y and another shareholder decide that their value of one share is going to be $100. So the total net worth of the company is $1 million. So the total capital is 1 million divided by the value per share, which is $10. That means $100,000 shares are there in the company. Okay, and these 100,000 shares can be divided in the ratio of the investment that the shareholders have done. Okay, so Mr. Y gets 90,000 shares and another investor gets 10,000 shares in his account. So what is the face value of Mr. Y's company? It is $10. This is the initial value at which the company is started the very first time. So this is the face value of the company is $10. Wow. Now, Mr. Y is running his company almost 5 years, 6 years, and he is doing well. He is earning more. He's increasing the wealth of his company, and now he wants to expand more. So he needs more capital. So Mr. Y needs to expand his company, and he needs more capital to improve, to expand his company. So for that time, Mr. Y is having 20 million for the expansion, and he has only $15 million in his account. In the company's account, only $15 million are there, and Mr's company is having the short of $5 million. Okay, it's a big problem. If he is not having the 20 million, then his plan of expansion is not going to work. So what could be the possible source of money from where Mr. Y can earn more? He can go to his friends and ask for the help. Okay, he can go to every friend and he can ask for the help. Okay, give me some money, please give me some money, please give me some money. Okay, but it also has some drawbacks. For how many friends he will go and knock their doors, please give me some money? Not possible. Or for example, today a friend is giving some money, or day after tomorrow, or after a week or two, he may ask Mr. Y, please give me my money back. I have some urgency. I don't want to give you. I would just want my money back. Just give me right now, right away. Otherwise, I will make a trouble for you. Or Mr. Y can go to a bank and opt a loan. Well, a bank can give the money to Mr. Y, but to start the setup, for example, today bank has allotted $5 million to Mr. Y, but he has to expand his business. So he want to put his new industry in some new place. It will take around 6 months of time to install the industry. Okay, but as soon as the bank releases the fund, after 30 days, the bank will knock the door of Mr. Y and ask Mr. Y, please give me my money back, which we have decided as SIP that you will return to me. Okay, this is the minimum money that you are going to give. Return me. Okay. So, as soon as Mr. Y has invested all the money, he has no money left in his pocket. It's a trouble for him. Oh, loan from the bank is also a bad idea. It's not a good idea. Well, Mr. Y can get some investment from another company as well. Another companies, he can go and ask some friend companies, okay, please invest in my company and I will give you some shares to you. Okay, yeah, it's good, and you become the promoter of my company. So it is a good option, but it is not always necessary that the companies will be having the $5 million that you are needed, that Mr. Y is needed. Okay, so these could be the possible sources of money, but might not be sufficient for Mr. Y to expand his business further. So I have already discussed about the disadvantages of these options already. Now, the next level idea of capitalization. So I went to there and say, hey, Mr. Y, why don't you collect your capital from the individual small investors? So who are these individual small investors? The people like Mr. X that we have discussed in our previous scene. So he says, what are you saying? Small individual investors? So the small individual investors are like Mr. X. They save a small amount of money at the end of every month. And there are millions of people like Mr. X are there. If you collect their money, you will get your capital for expanding your company. So I gave this idea to Mr. Y. So he is thanking to me. So there is a question in the mind of Mr. Y. Shall I go door to door to collect my capital? Okay. Shall Mr. Y go door to door, knocking everyone's door, individual's door, without knowing him? Oh, please give me the money. Please give me the money. Invest in my company. Invest in my company. No. So I told him, where do you buy grocery? I asked him, Mr. Y, where you buy your clothes or where you buy your electronic items? So Mr. Y said, from the market. Oh, he was confused why I asked him this silly question. So I told him back, to collect your capital, you must have to go to the market, and that market is called the primary market, and get your money for the capital. So he got my idea and he's thanking again for the information. Before moving into the capital markets, I'd like to discuss what is market. So market is a place where the buyers and the sellers come to each other and they trade a particular commodity. Okay, what can be the examples of the market? If I have to purchase some clothes, I will go to the market. Or I have to purchase some electronic items, I will go to the electronic market. If I have to purchase some stationery items, I will go to the stationery market. I have to purchase some automobiles, I will go to the automobile market. Okay, so it is a place where a same kind of commodity is being traded between the buyers and the sellers. Okay, so a particular market have few characteristics. So what are the characteristics of the market? So the first characteristic of the market is an area. So what is an area? It is a place where the sellers has opened their shops, either to purchase or sell the clothes, automobiles, electronics, groceries, vegetables, anything. It could be any commodity, it could be. Okay, it has a fixed area. Okay, and second thing is one commodity. They all are selling one kind of commodity. If you are going to the electronics market, then all the shopkeepers will be selling the electronic items only. Or you are going to purchase some grocery items in a market, the shopkeepers there will be selling the groceries only. Likewise, different markets, different shopkeepers, but they are selling commodities to each other. Now I hope you have understood my point. The third thing is a market has the buyers and the sellers. Without buyers or without sellers, there can't be a market. So market is a place where buyers are also there and the sellers are also there. Imagine a market where are the sellers are there only and no buyers are there. What kind of market is that? The sellers will be bored and they will be making their own losses. And what if a place where the buyers are present only and no sellers are there? Imagine the day when all the shops are shut down and you want to purchase some items. That place is not called a market. Okay, and one more characteristic is the high competition. So all the market all the shopkeepers, to be in competition, they keep their prices low to beat each other. Okay, in one place, for example, one item, one good, you are asking the price, okay, it is $50. In next shop you will ask this, it will be around $50 only. Few cents less, few cents more, but approximately you will get all the items around $50. Okay, so that is the thing which is called the competition. If someone, for example, all the shopkeepers are selling any object or any good at the dollar of 50, and there is one shopkeeper who is selling at $45, so all the buyers will come to that shop and rest all the shopkeepers will be watching that single seller. So they have to maintain this competition, keeps the market alive and prices reasonable. Okay, and one thing we have already discussed, the one price. So all the time there is one price. Bargaining, yes. We all love to bargain. Yeah. for each and every single penny we do the bargaining. Okay, how much for this good, how much for this item, how much for that. Okay, I am purchasing 10 items from you. Okay, at least I must be getting some discount on overall purchases. So there are lots of techniques of bargaining. Many people know about that, so I'm not going to teach you the bargaining tactics. Even I also don't know that very much, but these are the characteristics of the market. Now, what is the primary market? It is also a market, but in the primary market we do sell the shares. Shares of whom? Shares of a company. So people like Mr. Y, who has he has opened their own company, now want to sell their shares to get some capital from the public to expand their company. So this place is called the primary market. So the buyers over here are called the investors, and who are the sellers? The companies are the sellers of the shares. Okay, so let's discuss about the characteristics of the primary market. So about the area. So everything nowadays, almost all the exchanges are doing the trade electronically. So there is no limitation of the area. It is the exchange who does this. Okay, so you can say exchange is the market, but you can trade from anywhere. So one commodity here is also, we are selling one commodity, which is shares. The company could be any. Buyers and sellers, we have discussed. The investors are the buyers and the sellers are the company. So the next is high competition. For example, Mr. Y is selling the shares of his company. Again, if the prices of the shares of Mr. Y's company are too high, then the people won't buy the shares at that very rate. Or Mr. Y is selling his shares at very low rate, then also he is going to get the losses, because people could have paid more on these shares. So Mr. Y has to keep the prices of a share moderate. Okay, not very costly and not too much cheap. Okay, so next thing is one price. So again, the price is the issue. So prices have to be moderate. And bargaining. So here in this market, you can do some bargaining. Well, you can, but not as well. So when the IPO comes, so there are two types of IPOs. One is the fixed price IPO, and another has some bracket of the price. Bracket is there in the IPO. If it is a fixed price IPO, then you have to pay that much price. Or if there is some bracket, then you have to buy the share between that bracket of price. For example, if someone is selling, price bracket is $95 till $100, then you can place your bid with $95, or you can place your bid with $100. Whatsoever you choose, whatever you think about the company, depending upon your thinking, your analysis, you are going to invest. You have to choose the price between the bracket. Okay, so well, there is very less choice of bargaining, but there are lots of questions on primary markets. What is a share? So, what is a share? We have already discussed while we were creating the company for our Mr. Y. And now the good question: how many shares one investor can buy? Okay, and what is the price of that share at which Mr. Y will be selling? Okay, who is going to decide the price of the share? Who can invest? Who can? How can investor can purchase the shares? Okay, so all the answers you will get gradually. So now here we come to the IPO, initial public offering. Okay, we are still in primary markets. so so IPO is like an effort that individual is taking to open his shop in stock market. So you can say this is an effort to getting your stock, your company listed into the stock market. Okay, so let's discuss about what are the steps that a company has to take to get registered itself into a stock market. So the steps involved in IPO. The very first step is hiring an underwriter or an investment bank. So who is underwriter or investment bank? Well, it is a bank, it is a industry or institution which analyzes your documents, your profit and loss, your balance sheets, your assets, liabilities, different economical things, aspects, your area of working, and who are your customers, different aspects they first analyze and create a document based upon your upon the documents and their analysis. Okay, and then they go for the registration for the IPO. So for the registration of the IPO, they have to fill up a form where they have to fill all the analysis that the investment bank does, and they have to submit the required documents to prove their analysis. Okay, after the registration, after the filling the form for the IPO and the documents, this document goes to the regulator for the verification. This regulator could be the SEBI, like in India. In US, it could be a SEC or FINRA. Regulators are the institutions which keeps their eyes on the stock markets, brokers, all different participants on the market, so that no one can do anything wrong with the economy. Okay, so they are like the policemen. So they are going to make their rules, and they are going to make you abide by the rules. So for now, just think about the regulators like this only. And once the verification is done, then the Mr. Y company will go to the stock exchange and give their application to get listed in any stock exchange like NSE, BSE, or NASDAQ, any other exchange. And for the then the company will make the announcement to the IPO that they are coming with an IPO. After that, the public will start buying their shares on the primary market. And now the thing comes, the pricing of the IPO. Who decides the price of the IPO? I have already discussed that price should be moderated. It should not be too high or it should not be too much low. Now, these investment banks does the analysis, and based upon the worth of the company in current position, they decide the price of the IPO, what could be the price per share an investor have to pay to the company to get the shares. Okay. So, and once the investors are interested and they have reached the required amount of level they have sold, then the allocation of the shares happens to the respective individual investors. But it is not always necessary that all the shares that the investor has asked to buy will get all the shares, or it is also not necessary possible that an investor will get all the shares or 100% shares, or sometimes investor may not get any share. 0 share he may get, or sometimes the IPO is not getting listed because no one was interested to buy the share of that particular company. Any could be the situation. We will discuss these situations as well in later videos. Okay, now I am taking an example that investment bank analyzes the company worth and finds out that the per price company can sell their shares for $200. Good thing. Okay, so company needed $5 million, so per share value is $200, so approximately company is going to sell 25,000 shares. Okay, now the thing is, company gives its shares in lots. Whenever the IPO comes with a lot. What is a lot? It is a minimum amount of the share that an investor have to buy. For example, if Mr. Y's company says one lot has 5 shares, then investor have to buy 5 shares at least to get himself enrolled in the IPO. So in this situation, the investor, Mr. X, have to pay $1,000 for the 5 shares, and in multiple of 5 he can buy 2 lots. Then he have to pay $2,000. He can buy 3 lots, he can buy 4 lots, but he cannot buy 1.5 lot, 1.25 lots, or 1.75 lots. So they have to invest either 1,000, 2,000, 3,000, 4,000, 4,000, depending upon the Mr. Y's capacity. Okay, but the thing is that if it is one lot contains 5 shares, then Mr. Y have to purchase 5 shares itself. Now, what Mr. X have to do to invest in Mr. Y's company? Mr. Y is there. Okay, Mr. X is there. So what Mr. Y have to do? So first, Mr. Y have to open his Demat account. Okay, who is going to open this account? Well, and second thing he needs his trading account. Now, who is going to open his trading account as well? So there is one person, one institution, or not the institution, one body which comes in picture is called brokers. So Mr. X have to select a broker to open his demat and trading account. So Mr. X have to reach out to a registered broker of the market, of the stock market, and he have to open his demat account and his trading account with that broker. There are multiple brokers, but he have to choose one of the brokers. The broker should be registered with the regulatory body of your country. So this is an important thing. Okay, so we will discuss about who is a broker now. Well, a stockbroker is an individual or a firm that executes the buying and the selling orders for the investor for a fee or a commission. Besides executive clients' orders, some brokers have provide additional services such as research, intelligence, investment plans, margin, fundings, and such other value-added services. So you can think a broker as an intermediary between an investor and the stock market. Okay, now here you can see, here are the investors. Okay, there can be multiple persons like Mr. X. Okay, and here is the company of Mr. Y that wants to get listed into the stock market. Now the stock market will announce to the brokers that okay, on a particular date the IPO is being open for a particular company, and please inform your investors on that company's IPO. Okay, so it depends upon the investors whether they want to purchase the shares of the company in IPO or not. It's totally the choice of the investor. But if investor is interested, then he have to ask his broker, okay, please buy 1 lot or 2 lot, 3 lot shares of that IPO for me. Then the broker will take the money from you, from your account, and it will give the money to the market and get your application and give your application to the stock market that you are interested in the purchasing of that IPO. Okay, so and what broker will get in between? So as soon as he is going to put your order, so he will take some fee or commission in between, which is a very minimal charges that a broker takes now. Well, these charges could be varying with different brokers. Okay, you can go and get the information about the brokering charges with your respective broker. Now, what benefits Mr. X will be having after investing in Mr. Y's company? After taking the IPO, what benefits that Mr. X will be having? Okay, so Mr. X will become a partial owner of Mr. Y's company. Yes, Mr. X becomes the owner. It means that Mr. X is also running his company. It is something like that. Okay. So at what percent, what is the percentage of the ownership? Depends upon the number of shares Mr. X is going to own. So the number of own shares divided by total number of shares, not the shares only in the IPO, but overall shares that are there of a particular company, and multiplied by 100. So it calculates the percentage of ownership. And second thing is Mr. X will start getting dividends as soon as the company makes the profits. So time to time company gives the dividends. So dividend is a kind of corporate action. So I will discuss this entire topic on the dividends separately in the corporate actions video, a separate video on corporate actions. What are the types of corporate actions, and what kinds of corporate actions are there. All together, different video will be there. And so apart from that, the Mr. X is being profitable by as soon as the company is growing. So whatsoever the share price of Mr. X's investment into the shares are going up. So as soon as the Mr. Y's company is growing, the share value of the Mr. Y's company is growing, the Mr. X's savings will also grow. So ultimately at least minimum three benefits that Mr. X is getting. One, he is becoming the owner of the company. Second, he is getting the dividends timely. And third thing, wherever he has invested and the company's market price is increasing, so his wealth is also increasing.